Good evening, everyone. I'm in front of you to discuss about the future trend that we are seeing and what could be the potential impact it could have on the sectors or the macros of the country. So, before I begin this webinar and give you some insights about what are the sector trend that we are talking about today, just a small disclaimer that this webinar is only to enhance your understanding about the trend in the market. There is no way a recommendation to buy or sell. Please consult your financial advisor before doing any investment related activity. When you invest in the equity market, it does carry a little higher amount of risk, and investment in the securities are subject to market risk. With another disclaimer that past performance is no indicator of future returns. With this, if you look at today, I'm going to talk about the five trend. One definitely is that we recently saw G20 summit, and I think India's image in the world has moved up. So what kind of growth India is going to drive for the world? So what contribution India will make to the overall world growth, economic growth? So that's how I'm going to discuss about it. Second thing, some interesting data about the surge in the retail investors. Normally, what I've observed when the market sentiment goes down, retail investors tend to take a back seat. A number of new investors joining the market either stop or start declining. So have we seen that in last 1 year or so when the market was little topsy-turvy, and since April 2023 we have seen some increase. So what has happened there? Everyone talking about the climatic condition. We have seen what has happened in Libya, flooding and almost a huge damage that has taken place. Everyone is talking about global warming. So what is India is doing and how India's share of renewable energy is going up, and where do we see that? That's one. While we all know that government has put a huge capex of 10.5 lakh crore in the budget, but what is happening to the road and highways? There is a fair possibility that India can miss the target of highway construction in this financial year. Even the tender process of giving roads, highways, is also under some amount of softness, so I'm going to discuss about it. And of course, the last point is about the spread of the monsoon, how monsoon has really performed till today, cumulative, and which are the pockets which are a cause of concern. So these are the five trends I'm going to discuss about. So let me start with the India to contribute significantly to the world growth. So if you go back to the history and you look at it, China was accounting more than 30-35% of the world GDP growth. So that blue line tower that you see is of a China. And this data has been published by IMF. Now this blue line you can see is consistently above 30% of China, but it's going to decline as we can see. Am I right? Now India was always more or less than 10%. In a very few years, India actually contributed more than 10%, which has happened in last couple of years. If you look at it, this trend is going up and then it is coming down. But now what is it saying? India will contribute significantly to the very closer to the 17-18% of the world GDP growth. In other words, if there is a 5% growth in the world economy, 20% of that would be accounted by the India, and that gives an idea about how India is going to lead from the front in terms of growth trajectory. Having said that, China will continue to be one of the big players in terms of driving the growth. What is happening that China, but the impact is coming down. As you can see, 30% by 2028 or so will come down to near about just little about 20% or so. So very substantial deceleration that will happen, and that benefit China plus one that we are talking about, India could be one of the biggest beneficiary of that. So this data clearly shows that India is going to grow, and India is going to grow faster than the world GDP growth. Otherwise, you cannot be contributing positively to the significant to the world GDP growth. That data clearly shows this one. So I think, and eventually my sense is that if I have to extend it by 2 years, that is 2030, India and China could be contributing equal to the world GDP growth. And as we keep moving forward and forward to 2035, 2040 and so on and so forth, China might see that declining and India overtaking China also in terms of growth contribution, purely because of Chinese economies is aging, demographic dividend is no longer there, but India will enjoy a lot of demographic dividend, and more companies will come to India to set up shops and to not only to contribute to serve the Indian customers, but also making this as a manufacturing hub for the global audience. We have seen that happening with iPhone. We have seen that happening with other products, and this trend will further accelerate in the years to come. So if you are a little worried about Indian valuation and so on and so forth, remember India is a growing market, and it can always sustain the rich valuations that India has been commanding. Now historically, you go back to the trend, retail investors normally get little jittery when the market goes down. 2022 was not a great year. Even first 3-4 months was not a very great month if you look at it. But what I really like about the today's generation or today's retail investors, they are more matured. They've used every dip in the market to increase the allocation to the equity. And if you look at this trend, which I can see, in last 1 year, I just repeat, in last 1 year, 20% of the new Demat account has been opened. 110 crore, that is 103 million, has increased to 123 million. That is 20% growth has happened in last 1 year. And if you look at now, previously we used to look at 10 lakhs and 20 lakhs as a additional. But last month, that is June to July, it has gone to by 120 to 1. That is 30 lakhs new accounts have been added. And my sense is that by end of December 2023, we will have near about 13.5 crore Demat account. These are active Demat accounts. That means at least one transaction took place in that Demat account in last 1 year. Another historical evidence is that whenever IPO market does well, it brings in new set of investors to the market. So that is what is happening. So I think, and more, in fact, I was reading one article where Deepak Parekh said, I think in AGM of HDFC Life or AGM of HDFC AMC, I'm not very sure, he said that there are 50 crore PAN account, and there are only 11 crore, that's what he stated in his this one, the Demat account, which is, it's of course now it's 12 crore. And in mutual fund, he said only about, if my memory serves me, 4 crore or something kind of a stuff. So I think there's a huge potential. Many investors will come through direct, many will come through a mutual fund, But I think the flow to the Indian equity market is going to remain very continuously positive. Why this data is very important? This data is very important because we must understand market need liquidity to sustain at the higher level or to move up higher. In the higher number of Demat accounts, higher number of money coming into SIP is a clear-cut signal that liquidity is strong. And if the liquidity is strong, then market to correct significantly, probability of that comes down. We saw that on Tuesday that mid and small cap taking a huge beating, and then the next 3 days, Tuesday, Wednesday and Thursday, Wednesday, Thursday and Friday, they've again bounced back. So there is nothing kind of a gloom and doom. On Tuesday when I came in front of you, I did mention that there is no reason to get panic in the mid and small cap, and we maintain that. And number of Demat accounts makes me more comfortable that this is going to sustain, because liquidity is good enough to sustain the market at the higher level. Now comes the renewable energy, and I think it's a very, very critical, this data points. Why? There is a lot of pressure globally that we must be kind to the Mother Earth. Pollution in one format or another format is really killing the complete environment, but also impacting our health also. And that's why Government of India has taken a beat that we must increase our share of renewable energy in the overall capacity. Now you look at the difference. In 2015, I'm not going too much back in the history, there was a gap of 110 thousand megawatt, 110 megawatt between the fossil fuel and the renewable. Now that gap is only now 53. Am I right? And it's converging now. It's converging towards, and very soon, I think India will have more installed capacity of renewable energy as compared to the fossil fuel. See, remember, the fossil fuel capacity addition is now plateauing. Why? Because 189 se 238 tak hi gaya. That means only 49 got additional added. But in renewable energy, we added 105,000 megawatt in last 8 or 9 years. So that gives an idea how strong this, and this data can then, this will move here and this can remain here, or maybe it will come down. And this is the kind of trend trajectory that I can see in the years to come. And due to that, that rapid expansion, why it's very critical, remember that also, if India can have a renewable energy focus more, it will help economy in a tremendous manner. You don't have to spend too much money on the pollution, because pollution does cost add to the economy in terms of health and whatnot. The renewable energy basically makes the life easy for the government. It will improve our efficiency, cost of production, and so on and so forth. Why? Because renewable energy doesn't cost you as much as fossil fuel will cost you. And that's why, and of course it's also not the mercy of what is happening globally, the commodity prices. So that's a benefit that. So in other words, in FY 2019, we were about 15% accounted by the, 29% accounted by the renewable energy. That share has gone to 43%. And this has a lot of implications for the economic growth, competitiveness of the growth, and the standard of living for the citizen of this country. Now, if you look at the share of renewable energy, also is a little challenge. I must tell you that also. A 100 megawatt fossil fuel can produce 100 megawatt power, typically. It could be, plant load factor could be 80-85% also. So not 100, but maybe 80-85. Renewable energy, that's not the case. Why? Because it's a function of how much sun is available, how bright it is, how have you placed this. So always the installed capacity of renewable energy, even if it is higher, its contribution would not move in that proportion. So from 2016 to 2000, that's first YTD of 2024, the 6% has gone to 14%. This is a substantial jump. Unlike where 29% become 43, there it has become 6 has become 14%. And this will keep increasing as generation will keep increasing, and I think that's a very good thing. The prices of a lot of solar related products is also coming down globally, and that would further help to reduce. And once your production cost goes out and other things, it's going to bring in a lot of benefits to the economy. Now highway and construction. This is not a very happy sign, to be very frank with you. So if you look at Apple to Apple comparison, April to July 2022 versus April to June, July 2023, this date I'm talking about. The blue line that you see is an award, and the orange line is a construction. If you look at it, 1975 has come down to 1125. So road construction award has come down, even though the construction has gone from 2490 to 2670. What worries me to some extent, I'll be very honest and frank with you, the award picked somewhere in 2018, 17,055. And I'm not talking COVID years, because COVID was an exceptional year, so no one should blame them. But it came down to 5,000. And then it has been little struggling about this level. I think that's not something very happy scenario. And number one. Number two, somewhere our construction of roads has been also been little plateauing out. If you look at this graph, it's not moving up anywhere. So even though we did extremely well from 4,260 kilometers per for the for the year, we have gone to 10,000. So it has doubled. But last 4-5 years we have been struggling, and there are a couple of reasons for that. Funding is one reason. We got in between COVID, which also definitely impacted the construction activity because labor, this and that. And somewhere, I think the government also need to now change and bring in some new structure to again revive the construction. So even though the government of India said 13,500, a target for the award, very unlikely that's going to happen. Even though the pace has increased in the month of August for awarding, I don't think we're going to go to 13,500. In the same way, construction of 13,880, which is almost 30% or almost not 30%, 25% jump, is unlikely to happen. Why? Because this is an election year. So during election year, a lot of machinery will get busy with election campaign, election related what we call activity. And there is a high probability that India is going to will be undershoot or underachieve the highway target of construction as well as the award. I think we need to, now time has come for the government of India to rethink about it, what way we should do. There is various projects, various way they give a projects. One is that HAM, hybrid annuity model, that is called HAM, that is called HAM. Then there is a BOT, build, operate and transfer and so on and so forth. I think government of India need to really think about how we can increase, because highway are very, very critical to reach product from A to B, move our agri-produce from rural India to the city, reducing the price of the agri-produce, improving the efficiency of our logistic and so on and so forth. I think it needs to be done. I think government need to literally seriously think about that to work on this direction, because the data doesn't inspire much of a confidence as we speak, even though it did very well from FY 2014. Now the rainfall update. This data is as of yesterday, and if you look at it, what does this red shows is a clear-cut deficient rain. So there are many pockets that you can see. This is deficient, this one. Am I right? And this portion is completely deficient. What is yellow is an extremely large deficiency. And if you look at this pocket, there are many yellow, this is also there. which is a cause of concern. What you can see is a dark blue is a large excess, and the light blue is a excess kind of a stuff, and green is a normal. So this region has received excess rainfall, and this person. So right now we are 9% below average in terms of rainfall. It's very critical that India receives a good monsoon, otherwise there could also be a challenge at the reservoir level which could impact our rabi crop also. And second thing, it also is a question of farm income, because of late, if you happen to listen to some of the FMCG companies, they did say that the rural economy spending has started coming back. But if the rural economy start faltering because of monsoon or so, it could be a cause of concern. As of today, there are no concern. I must put it very, very clear cut. As of today, there are no concern. In fact, yesterday I was listening to Sriram Finance MD and the CEO, Mr. Chakravarti, and he said that they are not seeing any kind of stress in terms of their portfolio, and they are quite comfortable. Something similar has been expressed by Mahindra Finance also, which has a lot of exposure to the rural economy. So right now, situation doesn't look very bad, but at the same time, we must observe what happens to the rainfall. Right now, we are 9% below average. Let's look at the now positive trend. And I think what is really, as I was talking about the Demat, and then one is that you directly invest, and second thing, you invest to the mutual fund. Now look at the number for the month of August. 20,245 crore has been come, the net inflow into the equity scheme. And if you look at it, the last 4 months, it would be very, very similar. So what we received in last 4 months, little less than that. What we received in last one, little less than that, but a significant jump. And I think that really shows this market, more money coming into, will not allow indices to go down. Very quickly, negative trend. Now this is one trend which is becoming a little cause of concern for everyone. So India's crude oil basket, India buys, okay, and this data has been taken from PPSA, that's the government of India, this one. If you look at it, in FY 2021, we had an average basket of $44, which increased to $79 in FY 2022, which further increased to 93. And YTD, it was only 82. But yesterday, our crude oil basket went up to 94.1 barrel. Can you see this data? 94.1 barrel, which is higher than this level now. In other words, last week ka jo average se upar chala gaya. And I think that could be a cause of concern because it could also, on one hand, we are talking about government might decrease the price of petrol and diesel to soothe some inflation impact and so on and so forth. With crude oil price surging, I don't think they'll be able to do it. In case if they do it, someone has to take care of that budget or that deficit, and who will do that? So that's a challenge. So I think it's a one cause of concern that we are seeing negative trend. If this trend continues, who knows? We could go above $100 per barrel also, which is not something good for India. Why? Because 85% of crude oil we get import, which should not only put pressure on the inflation, but it also does put pressure on the forex reserves. And then, when your inflation goes up, your rate of interest goes up. If your rate of interest goes up and if your forex there is a challenge, your rupee depreciates and it brings in all kind of a double whammy for the economy. What are the major news? We touched 20,000 and we closed about 20,000. That's very, very good. FPI has sold near about 5,457 crore month to date. Digital disbursement has increased, and solar module price, which I was talking about, has come down by 76% in January 2000, indicating that people are basically the cost efficiency is coming to solar. India and Saudi is going to double their bilateral debt. That's very good. Inflation came down to 6.83% in August. It is lower than what it was there in the month of July, but still above the RBI comfort level. So don't expect RBI to cut rate of interest in a hurry. Today, the import and export data came down. Both have declined. And Sensex, even though closed for the week in a green, but advance decline ratio was not favorable. There were more decline as compared to the advance, and purely because of the mid and small cap. On that Monday fall that we, or Tuesday fall that we saw of crack of 4% in small cap and 2.5% in mid cap, they're still not able to recover. And due to that, for the week, they both close in the red, and due to that, advance decline ratio is showing more decline as compared to advance. With this, let's open the floor for question answer. Okay, and it's almost very close in September. So Venkachalam sir, yeah, you are said, Congress team, what's the next? Will it happen? Will it still remain the stock that will figure in top 1%? Sir, just to correct you, sir, Venkachalam sir, in the beginning of 2023, we had suggested that 20,100 Nifty, and we are above that level. So not 20,400, but 20,100, if my memory serves. We do expect some time corrections or as well as the price correction, but we are not revising our Nifty target upward. Again, repeat, we are not revising our Nifty target upward. We continue to believe that Nifty 50 should close by December 20,100. Will we still recommending stocks? Of course. We do believe that mid and small cap will outperform the large cap. On Tuesday also, when the mid and small cap crack, I came in front of you and did mention that don't worry, who knows, even tomorrow mid and small cap will bounce back. That's what exactly has happened. So nothing to worry. We will keep recommending stocks within the mid and small cap, even in the large cap. Not necessarily if the market does not go anywhere, Nifty does not move, doesn't mean that all large cap will not perform. Some will perform, right? And we'll keep recommending that company as a part of Mojo stock. So nothing to worry. In fact, today, as I speak to you, our investment committee just met before that. And there is one company which is coming as a new buy as in a large cap. Can we expect corrections in the coming months? Answer is yes. Should we expect crash? Answer is no. See, remember, and I was discussing with someone, I don't know whom I was discussing, I said correction makes market healthy. Why it makes market healthy? Because, so correction should not be considered as a bad sign. I always use correction as a good sign. Why? Because it makes a nice base for market to take a next leg of rally. If the market goes up like this, that means this rally is not sustainable. But market moves like this, lower top, higher top and higher bottom, that makes me very, very happy. So yes, I do expect Ashwinji market to correct. It should correct, because if it doesn't correct, it will make me more worrisome. So I expect market to correct to make a nice base. I do expect October to Feb, market should give positive returns. So while September may see some amount of time or price correction, but October to Feb, market should see nice rally. But having said that, I am not revising my 20,100 target for Nifty 50 by December 2023. You are right, Usmanji. Not only the price of crude has gone up, and that's even if you look at titanium dioxide, which goes into this one, that has also gone up. Even phthalic anhydride, I've been informed that price have gone up, which also a critical raw material to manufacture the paint. So yes, it will definitely impact the profit. Now the question is not this. So see, Usman ji, the life में इतना simple कभी कुछ नहीं होता है. It's always also, will paint company hike the price to mitigate that higher input cost? So that's the question that you should see. If my input cost is going up, but if I am able to pass on that input cost to the customer, then there is no challenge, na sir. तो कोई तकलीफ क्या है लाइफ में? But the input cost goes up and you are not able to pass on that cost to the customer, then there is a challenge. What have been observed over the years that some of the paint companies have been able to pass on that input cost to the end customers, and hence, even though it is going up, I don't see much of a challenge in terms of. And one thing which I was really surprised, and I was listening to more and more commentary, and today I think this guy also made a statement, Nestle also, that there is a huge buoyancy they are saying in the festive season. And if that is so, even company like paint should get benefit. Why? Because during the best time to paint your home is post monsoon but before Diwali, and that could happen, and that could further give the volume growth and maybe the price this also. So yes, on a face of it looks negative, but not necessarily. It's going to definitely impact the margin. If they don't increase the price, definitely it will impact the margin. But if they increase the price, there is no negative impact. Sir, if you remember, Bhargavi and John, we did mention that we are bullish on the metals as a sector, both steel and aluminum. In fact, today, Tata Steel got some grant from the British government also, so that should further this one. So my sense is that the metal as a peg should do reasonably well in the rest of 2023. So they should do well. What are the precautions to be taken care by the investors? Precautions are very simple. Do not allow your human emotions to impact you. Because human emotions आ जाता है ना, बहुत तकलीफ देता है. Am I right? So don't allow your human emotions. Be disciplined. That's a precaution that you need to take. See, if you do two things now, market volatility will be able to absorb very well. Because over a longer period of time, then you will realize, अरे यार move का गलती कर लिया. The problem happens that we are not able to manage the short-term volatility. In the long run, everything is fine. But how do you basically react to that situation? It defines what kind of successful investor. I'll give a very classical example that I was talking to someone and he gave me a very nice example. He said, Sunil, someone gave me a tip 4-5 years back. And I'm making a good money on that. तो बड़ा अच्छी बात है. But Sunil, you know what is the funny thing that happened? नहीं समझ में नहीं आया क्या हुआ funny उसमें. तूने तो पैसा बनाया. But Sunil, the funny thing has happened. The guy who gave me the tip, he did not make the money. तुम्हारा वो कैसे हो सकता है? If the guy gave you a tip, he should also make money because you also made a money. बोलता है सुनील उसका प्रॉब्लम ये हो गया जो टिप दिया था. He lost the confidence in that tip and he got out within 2 years. I'm still holding and hence I'm making a money. And that's what I say is a emotions, control over emotions and the discipline. So that's the only precautions that you should take. Okay, don't get too much emotional and don't get indisciplined. That's the only 2 precautions I would suggest. Rest of things, market would take care of it. Is the most important solution the largest but wrote down book. What do you think about Indian wind energy company's fortune? Alkesh, see, you are right. The wind energy is a good opportunity. My sense is that solar would play a very significant role in a country like India. If you go to the Europe, there is a challenge in terms of how bright the sun is. Am I right? In India, fortunately, we have a good amount of sunlight. And my sense is that we should focus more on the solar energy. I'll give you a classical example. My in-laws are from Surat. So they live in that bungalow kind of stuff. They call it a row house or something there in Surat. So they are on the ground +1. So there are 3 floors. The family lives. And on the terrace, they have covered with a complete solar panel. So they have a 2 plot, one next to each other. So that's a huge plot they have. And they have put a solar panel. Now, what is the interesting thing happened is that previously they were a net consumer of electricity from the torrent power. Now they supply electricity to torrent power. And previously they used to make payment, now they get the credit of that. So that's the change happening because of only solar power. So my sense is that solar is going to play a very critical role. Wind energy will make it, I'm not saying no, but I think solar is going to make much, much larger. Even if that number that you see, maybe next time when I come in front of you, I'll try to basically give you data, okay, how much has come from the solar and how much. If I can find very quickly, let me see if I can find you for you very quickly. Okay, no, not this one. Okay, yeah. So solar was 2632 megawatt in FY 2015. That increased to 71,145. 71,145 as compared to 2632. Now coming to the wind was 21,136 in FY 2015, which increased to 43,940. So in other words, in FY 2015, the wind was 9 times higher as compared to solar. And as I speak to you, the wind is half of solar. You got what I'm trying to say, the difference. So yes, wind will do well. I'm not denying that, but I think solar will do much better than the wind. That's what my sense is. Ankur, yes, the question is not very clear to me, but if I got it very this one, will sugar stocks do well? I think answer seems to be yes. There could be a possibility of ethanol price hike that the government might do that. Government has gone very aggressive in terms of ethanol, and hence I think sugar companies looks very, very interesting at this point of time. So should you add more to the portfolio? Answer is yes. I did not get your second one. Should we add few stocks with a short-term exit outlook? I don't know what you meant to say by short-term exit outlook. Yes, you can add few sugar stocks in your portfolio if you wish to. How do I see NIPAH virus impact? I don't see much of an impact. I know some of the states in southern like Kerala and Tamil Nadu did see some NIPAH. I think government is doing what it needs to be done to restrict the spread of that. But beyond that, is it going to run into the kind of a crisis that we saw with COVID? The answer is no. So yes, and I don't think anyone is talking about also, and to be frankly from the market point of view, is it a cause of concern? Answer is no. Assigned to the stock of business, does the large cap stocks 12 to 12 lakh crore market price also keep compounding at the rate growth of earning per share, or is there a limit growth stocks and market growth? Does market consider the market cap also while suggesting the maximum gain? So Archit ji, I think your question is very interesting question. What is the terminal value assigned? So analysts keep doing that job of what should be the terminal value at the end of 5 years, 10 years and 20 years and so on and so forth. See, what we need to understand is that, and this not only applies to the large cap, mid and small cap, it applies to across the market cap. The price appreciation is a function of not only earnings, but it also is a function of price to earning ratio. How much more you are willing to pay for that company, that also. The classical example, let me give you, the pharma companies in last 8-10 years have grown in terms of their net profit. Their EPS have increased, but still they did not offer you any capital appreciation. Why? Because PE which they used to command 8-10 years back has started coming down, and due to that, the price, so earnings growth was there, but price appreciation was not there. So I think we need to understand rate of compounding is not only a function of growth in earnings, it is also a function of growth in PE. And it's a very deadly combination. Your EPS is expanding and your PE is also expanding. And if that happens, you can make a lot of money. And what was the second part of the question? Just can you please flesh it again? Don't be in a rush to remove that. And has there limit, okay? Does market consider the market cap approach also as suggesting stock for maximum gains? So we do look at, see, we are run by IP. So we don't differentiate between large cap and mid cap and small cap, but we have certain parameters when we look at the growth of the company to assign how much points we should give. So if the large cap company even growth at certain X percentage, it can still get a point, versus a mid cap, if it grows the same point, it will not get the same point, it will get little less point. Why? Because mid cap are supposed to grow faster than the large cap because of the virtue of the size. And then you further go down to the small cap has to grow, supposed to grow faster than mid cap to get that kind of a point. So we do that. But in terms of our allocation, what we do basically look at allocation. And see, remember, Architji, one thing which I always observed, Indian market is always a market of mid and small cap. Why I'm saying so? Because if you look at historically, mid and small cap has outperformed the large cap significantly over the years. And something similar can also happen going forward purely because of the influx of the retail investors coming into the market, and that's going to become more and more. And within large cap, you will see some companies doing extremely well and some companies struggling to grow. That very similar. But yes, there will be always someone you need to understand. So don't get too much complicated by terminal value and something. Look at two things. Is this company can grow in terms of its earnings? So just put yes. Will market is willing to pay higher price to earning for that company? Now that's also a function of the sector fancy. So this sector can command the higher price to earning or not? And if the answer is yes, please go ahead and buy that company. Why? Probability of you going wrong with that company is very, very low. And don't look at the terminal value, because terminal value will keep changing based on the new data points keep coming in the business. And when Rakesh Jhunjhunwala bought Titan, I don't think he had in his mind also, okay, this could be the terminal value that I will going to assign to that. Am I right? Because it's a very dynamic number. Terminal value is also a function of growth in the economy, growth in the sector, growth in the P, and so on and so forth. It's a function of that. So don't look at this as this is a way. Say, I'll give you one classical example. Tata Group has a two company from the IT, TCS and Tata Elxsi. Look at the price to earning ratio. Huge difference. So that's what I keep telling investors. And look at the growth Tata Elxsi has given in last 10 years versus Tata TCS given. There's nothing wrong with TCS, am I right, as a company? Same business group, similar kind of industry, but growth is different. So it's a function of PE and it's function of growth in earnings. I hope that answers your question. Sir, those who have not 15th September, as you all know, that we have we are supposed to extend till only 31st August service, and then because of public demand, we extended till 15th September. Post 15th September, is from today, we have discontinued our Infinity service. So I'm sorry, sir, but the fact is that reality of the life is that we have discontinued the service. Those who are already in the process of onboarding of PMS, then we are giving some support to them just to help them to, there is no gap between the Infinity and the PMS. But for others, we have to discontinue that. What will the geopolitical impact of market by December 2023? Further next year with election in India, maybe it will be a good time to have a session or part of future trend. So geopolitical, I don't know, sir, which geopolitical condition that you are talking about, which can have an impact right now. I think Russia and Ukraine war market is already there in the price, so I don't think, and I don't see any other major geopolitical situation that could impact the market sentiment, at least by December. Election, maybe we can do that. That's a good suggestion, Raju. We will try to do that. But election comes and goes. I don't think this does make any impact to anyone. So market is agnostic to any government, to be very frank with you. The same, if you remember NDA government when Bajpayee ji was the Prime Minister, and everyone thought that Bajpayee ji will come back into the India signing campaign, if you remember that. 2004, they lost the election and market closed in the negative circuit. Market. 2000, why? Because UPA would have formed the government. The market did not like it. And the same UPA government, when they came back to the power again in 2009, market closed in the green, gave upper circuit. So market is agnostic to the government. It has happened in the past and it can happen in the future. And it's very difficult to predict who will come because we are still many years, many months away from the general election. Election result would be out only in May 2024. We are in September. In politics, even 1 day is a too long a period. So it's very difficult to this one. But having said that, your point taken, Rajuji, we will do an inclined analysis how the market behaves before election and after general election. We'll definitely do that. Which sector? We do believe pharma should continue to do well. We believe metal should do very well. We believe defense stocks should do well. We believe railway stocks should do well. We believe chemical companies should do well. So these are the 4-5 sectors. You ask me sectors, I've given sectors now. So not one but more. So these are the sectors we believe should do well. USD, I don't think rupee should depreciate further from this level. In fact, my view in the beginning of 2023 that rupee should appreciate against the dollar, which has not happened. But I don't expect further downside also, despite crude moving up. But I think the government is doing a good job in terms of managing the forex. So I don't think, even though today, as we speak, India's forex has gone to 11-week low. But I believe not a much of it. So I don't expect rupee to depreciate further from this one. On the contrary, I do expect rupee to appreciate, but that prediction has not come to till now. Let me be very frank with you. Mohan Kumarji, thanks a lot, sir. I hope you can come to our PMS family. You know, I was talking to one customer. Again, this gentleman could not come to PMS because of he doesn't have a 50 lakhs ticket size. But he was candid enough to admit that the kind of return I made, I could not have imagined also under infinity that I made actually. And all credit. And he said if God permits and this one, he will be a part of a PMS by March 2024. So that's what he basically, but yes, we are very thankful to you people also putting faith in us, faith in our service, faith in our IP, and you got onboarded our Infinity services. But sir, we would love to host you in our PMS service in case if you decide to come in. Atul ji, I think I did mention that railway stocks should do well. So please continue to hold railway stocks. Don't be in a rush to move out of that. So I think in the interest of the time, we will need to conclude this webinar, Future Trend Series. Thoroughly enjoyed your question, thoroughly enjoyed answering them. Please keep asking us a very intelligent question that really gives us a satisfaction that we could do that. With this, I'll take your leave. Monday again, my colleague Karan would be in front of you with a new Mojo Stocks entered. But on Tuesday, I'll be in front of you with Q&A with Sunil Damania. That's again where any question that we could not pick up today, I'll be more than happy to answer that. With this, have a great weekend. Enjoy thoroughly. I know the festive season is coming. Ganpati ji would be, Stapna would be there on Tuesday. Oh, sorry, the Tuesday the markets are closed. So sorry, I will not be in front of you. I think I'll come on Wednesday in front of you. So sorry, I beg your pardon. So Wednesday I'll be in front of you and will take all the questions that I could not take up today. With this, good night, take care.